Question 55 concerns exchange rate differences, and in this case is in the context of translating goodwill. So all it asks us to calculate is the exchange difference that will arise on the translation of goodwill to be included in the consolidated statement as at 31st of December 20X1. So here we're looking at the situation where HM has got 80% of the ordinary share capital of a foreign entity OS. That purchase took place 1st of January 20X1 and the purchase price was in crowns. So it goes ahead and gives us details of the net assets, tells us that they value NCI using fair value and gives us that fair value figure, all of which are quoted in the same currency. It then finishes off by telling us that at December 20X1 the goodwill that arose on acquisition was impaired by 20%, but that impairment is translated at the average rate and charged to group admin expenses. In terms of the consolidated financial statements then, we need to present those in dollars, so our conversion is between dollars and crowns. They've given us the relevant exchange rates, being one at the date of acquisition, one at our financial reporting date, and then an average for that year to 20X1 as well. So initially we need to follow our normal working three calculation to calculate goodwill. But we'll do that in the currency that everything's been given to us, which in this case is crowns, and given that we want our final answer to be to the nearest thousand, we'll work in thousands. So on purchase, the cost of the investment of 80% of the company was 13,984 crowns. The NCI had a fair value of 3496, and that was to acquire net assets with a total fair value of 15,800. So that using our normal pro forma, we would have calculated goodwill at acquisition of 1680, but unfortunately that happens to be in the wrong currency. So the first thing we would do is translate that back into dollars using the exchange rate at 1st of January X1, which here is that $1 is the equivalent of 1.61 crowns. So if we divide this by 1.61, it would give us an initial translation for our goodwill of $1043. So then we have our impairment. So if we start at that point, that we have goodwill at the acquisition date of 1043 in dollars. In crowns, that was 1680, and we now need to deal with this impairment of 20%. So in crowns, that impairment would have been 336, and it tells us that we translate our impairments at the average rate for the year. So here the average rate is 1.58. We would translate that impairment to $213. In crowns, that would leave us with goodwill to carry forward of 1344. At the year-end date, we would retranslate that 1344 using the exchange rate at 31st of December X1, which in this case is 1.52. So that as a carry forward figure, we would want to take that goodwill into our consolidated SFP at an amount of 884. At the moment, following through our exchanges so far, we have a carrying value of 830. And the difference between these is the exchange difference that we're trying to identify. In this case, that means we have an exchange difference of 54 working to the nearest $1,000.